Boy, that's one cute guy. Welcome to the closing beat, everybody. Happy Tuesday. Hope you're enjoying your day so far. This is our quick stock market update show on the new set, by the way. Thanks for the kind words on everything there. I'm not quite happy with it. We'll make a few changes there. But this just quick show we do to cover the stock markets and to help our customers as well. You guys are welcome to tune in and ask questions if you like. I will answer those at the end. Speaking of helping our customers, we actually are doing a class this Thursday. Well, which is 2 days from now, on analysts, what that all means, what current analyst ratings are, how they go about doing what they're doing, and then we post it here. We call it Wine and Wealth. This is what the little icon looks like. This was the last class we did, and our customers can then go back into the library and sort from everything from Wine and Wealth classes to the geeky classes. Yeah, there's a few geeky classes in there too, where we go over all the different studies and data and things. So all of our customers, of course, welcome to be a part of that. This, what you're seeing right now, is our new charts, the jazz charts there. So we're going to use this to cover the markets, and well, we'll get started right now. If you take a look at the markets there, off to your right-hand side of your screen, you'll see a decent rally, right? The Dow was higher today, added about 0.5%. S&P, same, a little bit better there, and the Nasdaq, 0.7%. Also want to point out the Russell when we get a second, because the Russell did well also. Here's what happened. We started off the day. We had, I don't know if you follow the market breadth, advanced decline lines. We started the day with 8-to-1 advanced decline. So basically what that means is for every 8 stocks that were higher, there were only 1 stock that was lower. And we haven't seen that in a while. I don't track that religiously, but we haven't seen that in a while. So that was off to a good start, meaning, you know what happened on Friday. The markets sort of got a little bit pummeled there. I'm going to switch over and show you. But the markets take a little bit of a beating there on Friday. And so today we started off, notice, right at about the halfway mark. Let me zoom in a little bit. If you're one of our customers, you log into the dojo. You can play along right with me. This will all look the exact same as you see here with me. But look, we tried to gap higher to take out about half of that. Very, very common that we move to halfway points. What that means is glass half empty, half full, that whole game that we used to play there. Notice how the market stopped right at about the halfway point of what it lost on Friday. So you have the bulls that go in and say, I'm interested. Maybe we can head back to new highs. So we start higher. Advanced declines 8-to-1. Lots of good support in there to buy the markets. Bank stocks were rallying a little bit as well. But then all of a sudden, nobody else came along. It was just quiet, right? So we didn't have any follow through in terms of the bulls. And so if you look at the chart to your bottom right now, you see that we just sold off little by little. Then Apple started pulling back as well. And all of a sudden, these financials took a little bit of a break throughout the day, and you get a bit of a pullback. So the markets are essentially letting you know we're not quite ready to just blast off to highs yet. There was no follow through from the morning's excitement here. And you can blame it on the housing numbers, a ton of housing numbers that came out today. They're all scrolling down at the bottom there. Blame it on whatever you like, but after what happened on Friday, people just are kind of dipping their toe in the water, not ready to really dive in full force. Now, the good news is on the bottom, that second level that you see scrolling by you, that's every sector in the market. They were all positive today. If you were to look at the number of stocks that made new highs today, 34% of those would be utility stocks. So if we could just take a quick look, that's one of the standout sectors here today is utilities. And I'll use the XLU just to take a quick look, and we'll zoom out. Let's give you a little more data. You could see very easily there, broke to new highs. And like I said, 34%, there were 39 stocks that made new highs. I don't know why I chose to put 34%, but it was 34% of 39 stocks that made new 52-week highs today. Did really well. So you got basically a market that's trying to get something done. I mentioned that I wanted to talk about the Russell. That's 2 days in a row that we say outperformed, but in reality, it just sort of played along. Remember, the Russell has not been playing along with the rest of the market, something we've pointed out every few days to grab your attention. Today was a decent attempt for that rally. However, and if you click this little tiny hidden arrow on your dojo charts there, you can draw on your charts if you feel like it. I'll draw on them today. I pointed this out yesterday. We've got a little bit of a downtrend there. So investors still have to and want to be convinced that we're going to move above that downtrend before anything serious happens there. So pretty interesting there. That's the overall stock market. I'll point out the Nasdaq here real quick, doing just a touch better than the rest, right? Trying to hold up there, and that's the big tech names there. But let's go through some of the sectors today. If you're interested, we'll take a look at some of the standout sectors. We talked about utilities. Energy was another one. The price of oil was strong today. It held basically about the 2% level all day long. If you want to use an ETF to track or to invest in the actual more physical oil-related, if you can't buy futures, right? Oil is a futures product, but if you can't participate in that, you can use an ETF. USO is one of them. You notice that was up just about the same as the price of oil today. There's a reason for that. Do a little research on the USO if you're interested. But basically, the stair-stepping in oil continues. And because of that, you had energy doing really well today, at least moving back towards the highs there. You had banking stocks. Whoops, that's not a symbol, and it's going to yell at me. The XLF, which is the big banking stocks, they also saw just a touch of a bid there, 1.1% gain on the day. More importantly, I think, was the regional stocks starting to recover a little bit. Not out of the woods yet. Yesterday, I mentioned, isn't it interesting that nobody came to buy that dip? Today, with the broad market kind of giving a little bit more of a rally, there was more incentive to buy the dip. However, if you zoom into the 5-minute chart, very similar to what the S&P chart looks like that I'm showing you on the bottom right-hand side of your screen now, it did give back throughout the middle of the day. So it's very much just sort of floating along with the rest of the jello on the plate with the market. Meaning it's sort of following the markets at the moment. There's really no significant money moving in there to sort of stand alone from the overall market. So we'll see. I mean, it was nice to see a little buying there if you do follow along with that or want to see the banking stocks because, we know we need them to get the market to new highs. So if you're playing along there, it was nice. Let's see if there's a little bit more follow through there. In the healthcare space, you can use whatever you want. I'm going to point out the individual stocks. Humana and Cigna. These were the only stocks to make 52-week lows today. So Humana down about 2.6%, and Cigna, the symbol is CI. Oh, I'm so bad at that. Cigna down about 2% as well. And what happened there is out of Texas, right? Department of Justice out of Texas said their Obamacare was basically unconstitutional. Whole thing that happened before. Remember, it didn't gain any traction. They tried to push it again. We'll see. You can kind of see that starting to creep its way into the headlines as far as the political season getting started. Oh boy, aren't you excited and ready for a political season there? Anyways, let's take a look. Transports. They did a little bit better today as well. All of the sectors I just mentioned, all higher by 1%, so they kind of stand out there. And again, the banks are interesting, but looking for more follow through if you're participating or if you're just looking to that area to help support the overall markets. If you're in the dojo, go to the far right here. You can actually see the XLF, and you can just click on like the IYF, another way to track the index of the financials. And so there you go, something for you there. Let's talk about a few stocks, and then I'll look at any questions you have and send you on your way. Apple started off good today. People were like, okay, great. Had a little time to do some research. Looks like this is all great stuff here that Apple's doing. And then the analysts came out and said, even if they were successful on all of that, it would change their earnings per share by a whopping 1%, meaning wasn't good enough. They weren't happy. Also, they had to guesstimate the pricing for these services that they were going to offer because we really didn't get a lot of pricing. So the media was all over that today saying, hey, how much is this going to cost? How many programs are you going to have on this Apple TV thing? I guess they're going to have about 12 shows, which is pretty good to get started there. And then some of the younger people were ragging on Apple for, hey, you pulled out Oprah. Like, she doesn't relate to me, the kids that were looking at that. Like, who's Oprah? Who's Steven Spielberg? They're like, I didn't see E.T. I wasn't born yet. What else have you done? So they got a little grief for not bringing out some of the younger audience there at their whole festival and show off that they had yesterday. So Apple started strong and it basically faded away throughout the day. Sort of normal that happens. We'll see what the next couple days hold. You actually wouldn't mind if that pulled back a little bit more, if I could just be really picky. You wouldn't mind if people sort of got frustrated with the stock for a few days and it pulled back towards under 178, 179 right in there. I think that'd be more interesting and grab a little more attention. Wouldn't be fun in the meantime if you happen to be an investor in the stock or sort of participating, but it's all good. General Mills. I don't like to toot my own horn every now and then, but this is a stock that's in our consumer staples fund. We were talking about the breakout, right? So we went back and we kind of mentioned this breakout here, which you can see there's even a line drawn already to show you that breakout. They came out with earnings. Everything's been great. Stock's a little overextended in the short term here. So if you happen to be following along and you played along there, you know, if you're a short-term trader, it sort of seems like a little extended. But that one's in our consumer staple fund and doing really well since the breakout and, of course, earnings. McDonald's, there we go, moving back towards 52-week highs. I sort of like these charts here, how they're showing. You can kind of easily see where those highs are. Anyways, the stock finished the day higher by about 1%. They don't make a habit of buying other companies, and they're buying another company. McDonald's is buying it's an AI tech menu firm software company out of Israel, I believe. If you want to look them up, they're called Dynamic Yield. And the idea here is that McDonald's bought them. I think it's about $300 million. Don't hold me to that number. The idea is that now when you pull up to the drive-thru, instead of seeing a stale menu, you're going to see a digital menu that adjusts and makes offers based on what's going on in the area, what's going on with the weather, what's going on with the time, the season, what's going on with the traffic coming through the line at the moment, and then the same in the stores as well. So they're trying to improve upon maybe squeezing a few more dollars out of you when you go to McDonald's. So I don't know. That's pretty interesting. I mean, good for them. First acquisition in over 20 years, by the way. Bed Bath & Beyond up 22%. You know Bed Bath & Beyond. Well, this is a Nasdaq stock. And today it was sort of announced that a group of activist investors, different companies, 3 different companies, got together. They put in enough money to buy about a 5% stake in Bed Bath & Beyond. And they want to replace the entire board. They essentially want to try to take over. They want the company to sort of restructure, work on its financials, slim down square footage of their stores, maybe have a few less stores, get a little more streamlined there. As far as a stock goes, when activist investors take over, it is widely sort of anticipated that the activist investors know more than the company themselves. That's why you see the stocks tend to take off. Go all the way back to Yahoo, and that was acquired by Verizon, and well, that was a disaster. But you get the idea of you can look at any of these stocks when it's announced that someone has taken a stake. Carl Icahn, Bill Ackman, he was in the news today. And so when you see that, I don't know why, to be honest, but most people go, okay, these are the smart people that have analyzed this business upside down and sideways, and therefore if they're taking over, they're probably going to do well. There's a difference between what's on paper and what happens in real life. Case in point, Burger King. Burger King was taken over by an activist group, and, Burger King, right? So that's all that needs to be said. It doesn't work every time, but that's what's going on with Bed Bath & Beyond today. NVIDIA, there you go, a little bit higher today, almost 2% on the day. They got some new coverage from an analyst. Speaking of analysts, right? We're going to cover this on Thursday for our customers. The analyst started coverage, right? So this is not like an upgrade or a downgrade, but it was a favorable initiation of coverage. We'll cover that on Thursday. Basically, he said, look, the price of NVIDIA right now is depressed, is at a favorable level. He's obviously bullish on the stock. And he also said that he thinks they will overcome current industry headwinds and that this stock is a buy. So his recommendation, not mine. That's basically what happened with NVIDIA today. New coverage from Piper Jaffray. It's not Jeffrey, it's Jaffray. KBH reporting earnings here after, it wasn't very good, right? So let's dig real quick. Give me a second to look. Earnings better than expected, revenue not as good as expected. But the issue, let's find where it is. New orders. That's what we're looking for. New orders for homes. Down 4%. So not good there for KB Homes, especially after the slowing market there. However, prices have come down a little bit for them as well. That could be good going forward. But the number that everybody looks at, you know how I say every time there's an earnings announcement, what's the focus? What do people really care about? New orders are what they look for in new home sales. And while we're on that, tomorrow, Lennar reporting earnings if you happen to care. So maybe that gives you a little insight. What else? Hey, do you like wrestling? WWE is a stock symbol. Always has been. It's always been one of the better performing stocks out there, believe it or not. They just quietly go about their business. Huge media and content business. You might know, you might have kids that watch it. MKM Partners basically raised their price target to $110. So basically more bullishness on World Wrestling Entertainment, WWE. Carnival down about 9% today. That's a little better than it was. If you look at Carnival, they basically said, we're not going to do as well as we said we were going to do. It's just not looking good. They lowered their earnings estimates. It was like they were at $4.80 a share. Now they're at $4.35 or $4.40 or something like that. It's a sizable adjustment. So the stock took a bit of a hit there. I know we were just talking about these. Royal Caribbean also pulled back a little bit as well, flirting with breaking through the 200-day moving average. And I think that's about all I got. Not a very busy news day. Yeah. Not a very busy news day. You guys talking about Tesla. Yeah, Tesla they didn't win a lawsuit. They got a dismissal of a lawsuit. That helped the bulls today. There was remember when he said about the production? I forget how, it's been so long. Like the days just blend together. He made the comments about production, turned out to be false, of course, taking the company private. There was a lawsuit basically based around that, and the Tesla was able to get it dismissed today. A little bit of a positive in the short term. I think people want to see that support level. I don't know that Tesla has fallen to the support level that everybody's looking at, and I kind of feel like it would break through that just temporarily. It's just sort of a, hey, you kind of look at Tesla, you see what's going on. Don't act on it in any way if it's not suitable for you, but I just sort of feel like this is a little bit of a temporary trick by popping up here and going, hey, good news. And then all of a sudden, it's like on a trampoline. You bounce on the trampoline and somebody pulls it out from under you and you go, oh boy. And for that brief moment, you know you're in trouble. It sort of feels like that. Horrible analogy, but just sort of feels that way. What happened to NEO? I don't look at NEO to be honest with you. This company, and I did this when they announced their IPO. I don't really. This is just a tough company. They don't make their own cars. They barely make any cars. Nobody really wants to buy their cars. When they went public, they publicly said, we're like a white label car maker, meaning somebody else makes their cars, they stamp their logo on it and send it on its way. And so at the valuation they went public, I just don't see how. And I know they're being sued for sort of misrepresenting their offering, but that's a tough one, man. You could understand short covering rallies if the stock's even shortable at this point, but yeah, that's all I have to say on that one, I guess. Yep. Yeah, all about the falling stuff. Morningstar says, man, I'm going to let the S&P 500 pull back. Today did not convince you that it won't, basically, right? So the bulls had their shot today. They couldn't do it. I mean, maybe they do it tomorrow. I don't know. Maybe there's some news or something. But you just didn't, right? You didn't get that commitment today that made you say, I have to chase the SPY here. So Morningstar's got a plan. Nice. Disney bouncing a little bit there. Just in the short term, it was a little bit overextended. We were kind of mentioning that last sell-off after closing their deal with Fox and sort of soaking up all their media assets there. Yeah. So nice little temporary bounce there. AX says the animation on the screen behind of you is distracting. Oh, that's nothing, man. We were working on an even more distracting one. Hang in there. All right, that's all I have for you. I will wrap it up. If you're interested, if you're one of our customers, you're interested in knowing about analysts, where they stand right now. I mean, I'm going to break it down and actually cover the top stocks that have the most analyst upgrades at the moment, most analyst downgrades, how many analysts are covering these different sectors and why everybody follows them so much. But coming from point of data. We'll focus on the data for sure. Got some final touches to put on the different slides that they'll put together, and well, we will see you then. If I helped you in some way, maybe you'll hit the subscribe button. That's all I have for you, and thanks for watching. We'll see you tomorrow. Yeah, we'll do it all again tomorrow.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.